Welcome to the Legacy Years podcast. I'm Kristy Osborn with Fairway Home Mortgage. Today, we're going to continue the conversation around long-term care, but from a very specific angle. So in a previous episode, we talked more broadly about long-term care insurance products, what they are, why families may want to consider them. So if that part is new to you, I encourage you to go back and listen to that episode to kind of catch up. So today we're focusing on what happens when a family is actually ready to use those benefits. How do you understand the policy? What triggers coverage? What paperwork is needed? And how do families avoid delays or confusion at a time when there's already a lot of stress? So my guest today is Dr. Douglas Dickson. He is a spinal surgeon and the owner of a non-medical in-home care agency, and he brings a unique perspective to helping families understand their long-term care benefits and navigate their next step with clarity and with confidence. So welcome, Dr. Dickson. I'm so glad that you're here today. And why don't you start by telling the audience just a little bit about yourself?
Sure. Douglas Dickson. I'm a board-certified orthopedic surgeon, and I've been treating a lot of complex spine patients. But what drew me and brought my interest into home care was I saw a lot of patterns in terms of the caregiving after surgery. Okay, so I'm one of the co-owners of SYNERGY HomeCare TX50. We're based in the Dallas-Fort Worth area. So sometimes, when you do surgery on patients, complex spine surgery on patients, well, they spend time in the hospitals. Most of the time they spend in the hospitals, probably a limited amount of time, but they've spent a lot more time at home recuperating. Okay, so I've been practicing for over 14 years, and I saw a pattern that really piqued my interest. Some of the patients that came back into the hospital for like readmissions, even though you did a technically great surgery, the outcome sometimes unravels at home. Some of these patients that we operate on probably on the elderly side, the 65 years old have an elderly spouse. And sometimes they may go home with an issue with, on transfers. They have a balance problem, right? When they have a balance problem, the spouse cannot really help with the balance problems, right? So they may need a qualified caregiver to be able to help. For example, I had a patient that we did a complex surgery, took about 8 hours. Okay. Went home, was doing well the first 2 weeks, then was at home and experienced the fall. Okay. There's also risk of fall. Okay. When she had a fall, all the instrumentation that we did started pulling out of the spine. Okay. And, if she had a very well-trained caregiver at home, that caregiver would have been able to help that patient and prevent that fall. Okay. So I tell people, yes, when we do the surgery, most of the care happens at home, not at the hospital.
So hugely important what you do. And it's an interesting connection that you made. And it really shows your heart for not just what's happening at the surgery, but the long-term care and that long-term recovery of that patient. So thank you for that.
And another thing that I've also noticed, another pattern I've also noticed is, as we age and we get to about 65, the risk of dementia goes higher. In the United States, there's about 7 million people living with dementia. Yeah. Some of these patients can come to your office, and as you talk to them, you may not identify or you may not know they have dementia, but even the stress of surgery can reveal a lot of stuff. Okay. And also the demented patients also have a higher risk of readmission, like a 30-day readmissions. I remember serving a very good veteran who had served the country, and they had a history of Lewy body dementia, underwent spine surgery. He did very well, but his post-op care was also really impacted at home because he did not have a dedicated caregiver at home helping him to overcome the stress of after surgery. Okay. Yeah. And I've seen patients and families drown in the cost of the aftercare. I tell people this Medicare does not pay for long-term custodial care. And about 70% of the people who are over 65 may need that in the future.
Right.
And that is also one of the reasons why it piqued my interest to, go through training to be a long-term care claims professional so I can help people who need to hopefully use their long-term care to pay for this after home care.
Right, right. So let's dive into that because that's really what I want to help folks understand more about today. So let's talk about what families often don't understand about the long-term care policy that they do already have.
So first things first, as you stated, it's a contract, not a promise. Okay. And every contract has terms that needs to be satisfied to be activated. That's number one. Number two, with the long-term care insurance, I tell people as in real estate, as you are into real estate, we talk about location, location, location. With long-term care insurance, it's documentation, documentation, documentation. Okay. So you need the right person to be able to document what you need. And also employing the right care agency or the right caregiver opens up the door for you to activate your policy. So a couple of things I tell people is number one, since it's a contract, you have to know the terms of your contract. It's extremely important because it's the terms of the contract that you can really lean on to activate the policy. Okay. And I tell people this. One thing that you need to know is you need to know what we call the schedule of benefits on your policy. Okay. The schedule of benefits I tell people is this. It's what I call the nutritional label of the policy. It tells you exactly what's in your policy. Until you get to know that, you will not be able to know the terms of your contract.
Makes sense. So you mentioned documentation. So what type of documents is it that they're typically looking for?
So let me backtrack on that. Number one, with the policy, like I stated, you have to look at the schedule of benefits. And in the schedule of benefits, there are certain things that are listed, which I will list them all and we will dive into detail to talk about them. Number one, on the schedule of benefits, number one is what we call the benefit triggers. Okay. Because it's a contract, you need certain triggers to be able to activate that contract. That's the first thing that you need to know, the benefit triggers. Number two is what we call the elimination period, or it's called the waiting period. I call it the deductible of the policy. With every insurance policy, there is a deductible before the real benefits kicks in. Okay. So you have to understand the elimination period as well. Then there's one portion, also one component called the daily benefits. Okay. The daily benefit tells you how much the carrier is going to pay per day per care you receive.
Okay.
Then also we have what we call the monthly amount. Okay. The monthly amount also talks about how much they're going to pay in a month for the care you receive. Then there's something very, very important called the inflation protection rider. Okay. Sometimes your policy may have that rider, meaning if you paid for if you bought a policy that paid about $200 a day, probably 20 years ago, if you had an inflation rider, which is about 5, which kept compounding every year, today, that $200 a day will be worth about $530 a day if you are able to use it. And the last thing on the schedule of benefits is called the duration of your policy. And it all relates to the amount of money available to you to use that policy. So these are the things that you need to know on the schedule of benefits.
Okay. So we talked about the first thing is the 7 triggers. Can we talk about what those are?
More than happy, because that's if you don't satisfy that trigger, you cannot activate your policy. So I tell people this: there are 2 doors to activating this policy. Okay, I like to create scenarios so people can understand the scenarios. So you see your long-term care insurance like a big mansion. Okay, the big mansion has rooms in it. Whenever you pay your policy, they give you a room. Okay. And that room stocks up a lot of cash. Okay. So to get into the mansion, you need to open the doors. Okay. And the triggers are what opens the doors, unlocks your policy. So there are 2 doors we want to talk about. Door number one is what I call the activities of daily living door. Okay.
Okay.
Every door has a key, but let's talk about that door. Okay. Well, the activities of daily living trigger or door, the insurance carrier looks at only 6 activities of daily living. Okay. Number one is bathing. Can the client or the individual go to the bathroom and bathe safely with no issues. That's number one. Number two is continence. Okay. Are they continent? Yes or no. Number three is dressing. Can they dress on their own without needing any help? Okay. Number four is eating. Can they eat without any hazard of choking, or can they eat on their own? They don't need any help for that. Number bathing, continence, dressing, eating. Number five is toileting. Can they go to the restroom safely, walk to the restroom, use the restroom, and have a good hygiene after the restroom? And the last one is transferring, getting out of bed to chair or out of bed and walking around the household with no help. Okay. So these are the 6 activities of daily living the insurance carrier is going to look at. Some policies, all you need is help with only 2 of these. Then you activate your trigger. You don't need to use all 6. You only need help with only 2. The help could be hands-on help. Okay. Meaning you need somebody to help hold you to get the work to get the activities done. Or it could be standby help. You don't need to hold the individual. You have to be in close distance to help the individual. So that's the door number 1. Okay. You can use the activities of daily living door to unlock your policy or to activate your policy. Okay. Door number 2 is what I call the cognitive door. Okay. Anybody who has a cognitive impairment, okay, like maybe they may have dementia or they may have any form of cognitive impairment that requires substantial supervision. Okay. Meaning they cannot be left alone due to the fact that it may affect their health or safety. That can also trigger that. That is the door that most family members miss. Okay. The mere fact that a dementia diagnosis requiring somebody to stay with you and supervise you is also another door that can unlock your policy. You don't need to lose the ability to do the activities of daily living. The cognitive impairment alone can give you the access to unlock your policy and enjoy the benefits that you paid for 20 years ago.
So let's talk about we've met those triggers, 2 on one side, or maybe we need the other, and now we're activating our policy. But you mentioned an elimination period. So what happens next?
Good. So after you meet the trigger point, after you trigger you meet the benefits trigger, the elimination period, like I stated, is called the deductible period of the policy. Okay. In that elimination period, you pay for care. Okay. And the elimination period, it's all based on what was in your policy. Okay. Some elimination period is about 30 days. Some it's about 60 days. Some is about 90 days. Okay. So your policy would tell us how long your elimination period is. Again, in the elimination period, you still need care, but you pay out of your pocket for that care. The elimination period is counted different ways. This is where people miss it, and it's a huge mistake and financial blunder if you miss this. Okay. In the elimination period, they have what we call the calendar days, and they have what we call the service days. And I'm going to explain all that. Okay. In the calendar days, if your elimination period is counted by calendar days, when you become benefits eligible and you're certified by the insurance carrier and you are on the calendar days, the first day that you get benefit eligible and certified to use your policy, the count begins on that calendar day. Okay. Whether you use, for example, if your calendar days is 90 days and you start care today, okay, whether you pay for care within the 90 days or not, by the 90th day, the insurance company by law has to start paying you benefits. Okay. So you may start the day today and not even use care or use care sporadically within the calendar days. By the 90th day, insurance company has to pay for that. Okay. The service day is different. Okay. You may have a service day for 90 days. That's true. But how are you credited on the service day? With the service day, every day you use care and it's paid for, it's counted as one day. Okay. So if you use care today and you don't use it tomorrow, you still be credited as what? 1 day, as opposed to the calendar day that if you use care today and you don't use it tomorrow, you still have your credit for the calendar, right? So what people miss is as much as your service day is 90 days, if you don't use it consecutively, right? Your 90 days maybe even extends to 11 months. Because if you use care 2 days a week, it will take you 11 months to be able to get to that 90 days for the benefit to kick in.
Is there any requirement of you had to use the service for a certain number of hours on that given day? Or it's just, hey, I had somebody come in for an hour. Does that count?
Yes, it counts. There's no requirement. You just have to use the care and the care has to be paid on that day. Okay.
So, yeah. Okay. Drastic differences. So people really need to know what their policy states so that they're prepared whether they're going to have to pay for care in order to start using their policy or not.
Yes. And there's another kind of counting of elimination day, which is a hybrid of the calendar day and the service day, which is called the credit, right? Sometimes the policy will give you, a leeway stating that if you use care for 2 days, we will credit you for 7 days. Okay. So that could also shorten your elimination period. You don't need to, if you use it for 2 days and you have credit for 7 days, well, sooner or later you get to meet that requirement quickly. And also for some older policies, there's what we call the 0-day home care period. Meaning, if you are eligible for home care, there's no elimination period. You can, use that home care and they will pay for it. Okay.
And how is that determined?
It's all determined based on the wording in the policy. In the schedule of benefits under the elimination period, it will spell it out and it will define what you need to know. So that schedule of benefits is extremely important. It tells you a lot about the policy.
Right. So we talked about the first two, but you said there were how many terms that you kind of go through?
There's about 6 terms. And the third one, which I want to talk about, is what we call, the reimbursement, indemnity, and cash option. Well, that's why you get your money. That's why you get your reimbursement. Yes, you have the trigger. You satisfied the elimination period. Now you got to get your money back, right? Okay.
Right.
So the word reimbursement, the reimbursement means what it says, okay? They reimburse you for the care that was provided. Okay, so for example, if you have a policy that says, I will reimburse you for, let's say, $200 a day. Okay, if your insurance policy is if your insurance policy states you on the reimbursement side, if you use the policy and you spent $160 a day, they'll just reimburse you for $160 a day. Okay, the remaining money still stays in the bank. Okay, that's called the pool of money in your insurance bucket. Okay. So that's what the reimbursement does. They reimburse you for the care that you obtained on that day. Okay. For the indemnity bucket, okay, they give you the money for that day. Okay. So for example, $200 a day is your money that you are allotted to. If you use care for, let's say, $100 a day, they will still give you your $200 a day. Okay. So that's more flexible. Okay.
Right.
And the most flexible is what we call the cash benefit strategy. Okay. So that one is when you become benefit eligible, they give you the cash right away. Okay. So whether you use a caregiver or not, they will give you the cash right away. Okay.
Like a lump sum?
A lump sum. Exactly.
Oh, wow.
Yeah. They'll give you the lump sum. So for example, if let's say your monthly lump sum was, let's say, $6,000 based on your policy terms, right? If you become benefits eligible, they give you that $6,000. You have a right to decide what you want to use that $6,000 for. And it's, like I said, it's more flexible. Sometimes these carriers will want you to use a licensed caregiver or a licensed care agency before you will be eligible for this, for the money or for the elimination period, right? But with the cash option, you can even employ or use a family caregiver if you have that. The family caregiver may not necessarily be a licensed caregiver. right? So the couch gives you a flexibility of choosing the caregiver and the agency that you want to use.
Got it. It makes a lot of sense. I'm assuming, and we're not talking about this, but I'm assuming probably there's difference in price point and eligibility when you're putting this plan in place on the front end. So go back and listen to that other episode, but do think about those types of things when you're talking to those professionals that sell those policies. Okay, so let's talk about the fourth item in the line of the benefits.
So the fourth item is what I call the inflation rider, right?
I
And
thought that was interesting because we had something like that when we had a house fire and it saved our tails to have that inflation. I didn't even know we had it, but our insurance agent did a great job for us. So let's talk about that.
good. So the inflation rider is okay. Most people bought policies about 20 years ago. In the United States, there's an estimate that about 8 million people own lifetime care insurance.
Wow.
And about 5 million of them were bought in 1995 to 2005. Okay. So most of the policies are now 20 years, out now, right? And that is the sweet spot of activation of the policy. Okay. As you know, we are in an inflationary environment, right?
Mm.
I remember we just went through the COVID pandemic and things just went up. I mean, things are expensive than they were before. Okay. So caregiving cost also goes up. Well, the inflation rider, if you had that inflation rider in your policy and you paid for that, let's say with a 5% compounding, and you bought that policy, let's say in 2005, stating that you will be paid or you're eligible $200 a day for care. With a 5% compounding in 20 years, if you wanted to use the policy today, your $200 a day today is about $530 a day of care, okay?
Wow.
Which is extremely important because as we all know, things get expensive almost every year, okay?
Hmm.
So instead of your policy being a museum piece with your $200 a day, now it becomes a policy that you can really use for care at today's prices. So it's extremely important that you have to know what inflation rider you have, or even if you have one. And if you don't have one, you got to make sure you have one. Because like I
Right.
stated early on, it doesn't get cheaper. It gets more expensive as we go. As we age.
Yeah, it's crazy. It really is because a policy, if they didn't have that, would not really be that helpful today.
Yep.
Yeah. Okay, so what's the fifth one? We're down to 5.
So the fifth one is what I call the duration of the pool of money. Okay.
Okay.
So, your long-term care insurance is just like a bank. Okay. And the pool of money also determines the duration of your policy, right? The faster you use the money, the less the duration is, right? So for example, some people may have, the long-term policy, the average long-term care policy is about a 6-figure, bank. Okay. And let's say if you have about $500,000 as your bank, okay, and you use the policy, you use 100,000 a day, 100,000 a whole year, right? It
Right.
would take you 5 years to exhaust that policy, okay. But if you use 50,000, well, it's going to take you 10 years. So you got to know how much money is in the bank for you, okay. That's the pool of money. That's also something that you really want to know, especially when it comes to, planning of care and what you want to use, because as you know, every portion at home, let's say facility or any care or nursing home, it's expensive. So you got to know how much is in your bank for you to use that. So that's the fifth one. Okay. Then I'm going to segue into the sixth one. Okay. And the sixth one, the policy tells you what services are qualified under your long-term care insurance, right? Okay. Some policies will allow you to use it for home care. Some policies will allow you to use it for only facility. Okay. Also,
Okay.
yes, and also some policies will state it this way: you can have some home modifications in your house. For example, put in some guardrails, especially in the bathroom to prevent falls. Some policies can pay for that. So you also got to know that in that part of your policy, that what it covers and what it does not cover.
I have a question about the pool of money. So is there a start stop on a policy? So I need this care and I need it for a certain maybe a year and I get better and I don't need that care anymore, can I stop receiving those services and reserve that pool of money for if it happens again?
Absolutely.
Okay.
It's like your bank account, right? You draw money from your bank account. If you don't want to draw it anymore, well, you pause. The money is still yours. It's still in your pool of money. It's still under your name. So exactly. And you brought a very interesting point. The elimination period is satisfied one time, mostly once in a lifetime. Okay. So exactly as you said, if you satisfy the elimination policy and you use this amount of money from your care bank, the next time if you want to use it, you don't have to go through the elimination policy period again. Okay. So the elimination period is one time, and that fits into that question that you asked.
Yeah. What are some common reasons why someone might be denied or delayed on a claim?
Good. So again, I put this in two brackets, right? Number one is the caregiving aspect, and number two is the policy aspect. Let's focus on the caregiving aspect. Okay. So some policies require you to get licensed home care agencies and licensed caregivers. Okay. So if you don't get a licensed caregiver, well, they will deny, your claim. Okay.
Okay.
Because that is part of the contract. Okay. That's number one. Number two, also people may miss the calculation of the elimination period. Okay. If there's a calendar versus service, days. If you miss that, if you on the service day and you think you're on the calendar day, well, you're going to pay for care out of your pocket, and they're going to deny that because you have not satisfied the elimination period. Okay. Another thing that causes delay, as I stated earlier on, documentation. Documentation. That is the long-term care mantra. Okay. You may have grandmom or mom that needs the policy. Okay. They've satisfied the benefit trigger. They've qualified through the elimination period. The care notes has to mirror the policy language. Okay.
Okay.
That's what I tell people. I like to review the policy and see the language in the policy and create a care note that will match that policy's language. So everybody's policy language is different. Okay.
Wow.
So when I create the care note, I'll look at your policy and create your care note. So your care note, as much as you need the ADL trigger, your care note fits your care policy language. Okay. So everybody's different. So you can't just use a blanket note, and I tell people insurance is insurance everywhere. In medicine, exactly. Documentation in home care is still documentation. You have to be able to document. You can't just go to the home and say, grandmama was doing well, fine. No, you have to document. We provided hands-on care or standby care for maybe bathing and dressing. Every day you got to do that. Otherwise, the insurance carrier is not going to pay that because remember, it's a contract, and your documentation should match the contract law. And one thing that really gets to me and really hurts me is people sometimes lapse their policy. Okay.
Yeah.
Meaning they stop paying premiums.
Right.
It hurts me so much that it's something that I want everybody to get on this, podcast. Number one, if you are at the point that you think you're going to lapse your policy, number one, because maybe the premium is too expensive for you, you can reach out to your carrier and talk to your carrier about maybe lowering your premium and also lowering your benefits. Okay. To be in a ballpark how much you can afford. Okay. Also, sometimes the people who are paying the premium are the people who may have, or the person who may have the cognitive impairment, right? Somebody with dementia paying premiums, well, they're going to forget paying the premiums, right? So they can lapse the policy because of the cognitive impairment. Actually, there is a caveat in the policy or a law that states that if you lose your policy or you lapse your policy because of cognitive impairment, the insurance company can reinstate you in a specific window. Okay. So we got to make sure that we know that. Also, I tell people before you get to the cognitive state, you can a state in which you have a cognitive issue, you should call your insurance carrier and tell them you need a third-party notification on your insurance policy, meaning you can elect somebody, maybe your adult daughter or adult son, or somebody who is responsible for you to be part of the policy so they can really reach out to that individual if your policy is about to be lapsed. Okay, so it's kind of like a security blanket for you as well, because you cannot tell you cannot predict when somebody's going to be demented or have dementia, right?
Right.
So if that thing if somebody is at the back end who the insurance carrier can reach out to prevent the policy from being lapsed, and it's extremely important. Remember, as like I stated, these policies are 6-figure policies. Okay, that may even be equal to your home equity loan. Okay,
Right.
so you got to make sure you don't just lose that policy. You got to get the benefit that you've been paying into.
Yeah, I think those are all important, very practical things that people can do. I did have a question, and you may have answered it already, about what adult children or spouses might need to review in the policy before we're in a crisis mode. And so I know you mentioned the third-party notification. Are there other things that you think that they should really look at ahead of time?
Good. Number one, again, the schedule of benefits. You got to know what's in the schedule of benefits. Number two, I tell people this. We got to make sure the premium is up to date. Okay. If the premium is not up to date, you can't enforce the policy. And number three, I tell people this. If the premium is up to date, you should call the insurance carrier and request for what I call the verification of benefits. The verification of benefits, I tell people, tells you exactly what the policy will pay today. Okay. So you want to know, especially if you have an inflation rider, okay, you want to know how much it's going to pay for today. If you want to know that, you want to know also the daily amount, the monthly amount as well. You want to know the elimination period, as we talked about. You want to know about the triggers as well. And you want to know what type of caregivers they're going to pay for, right? Is it going to be a licensed one, or an unlicensed one, or a family caregiver can still, provide the care and get reimbursed or get paid for that. So that is what you need to know. If you don't know about the schedule of benefits, you have to know it now.
Would that verification of benefits include whether or not the policy was willing to cover community, or whether they were willing to cover in-home care, or whether it would be the choice?
Yes, it would tell you exactly that. Yeah.
Perfect.
And also the caveat is you don't call the sales department, you call the claims department in the insurance company. Okay. Those are the people who can help you. And also don't take the somebody who's going to be on the phone, tell them you need it in written form. They should give it to you in written form, not what you're saying. No.
This is great advice, not just for adult children and spouses, but if you yourself own a long-term care policy and you put it in place 15, 20 years ago, you may not even remember. So getting that verification of benefits is really a great piece of advice. Thank you so much, Dr. Dickson. I always ask my guests if there's anything else that they wanted someone to know about their area of expertise that we didn't cover. What would that be? And we may have covered everything. So you may not have anything, but if you did.
Yes. And I tell people this. I'm a board certified orthopedic spine surgeon. That's true. But I also love home care because I know home care is an extension of what we do from the hospital and recovery. Okay. And I'm also a certified Alzheimer's disease and dementia care trainer, a certified dementia practitioner as well. And like I tell people, I love to serve our seniors. They've served the nation. We have to give back to them. Okay. So our caregivers are mostly, they're trained in the area of dementia as well. And also, post-op care, home care as well, to help decrease 30-day readmission rates, to decrease mortality rates on people after surgery. And also I tell people this, care is expensive, right? So that's why I've taken it on my own time and effort to also get to know this long-term care insurance inside and out, to be able to help people to get the benefits they've been paying for 20 years and more. It's not free. You paid for it. So you should be eligible to it when you need it. So I'll tell people, reach out if you have any questions, because I tell people this, it's a free consultation. I love to do that to help our seniors enjoy the benefits of their labor.
Well, I appreciate that. And can you tell folks again the name of your agency, and will you tell them your service area?
Yes. The name of the agency is Synergy HomeCare TX50, and our service area is in the DFW area. And I tell people you can reach us out on 469-599-7444. Again, 469-599-7444. And my email address, which I'm more than happy to help, is Douglas Dickson. So Douglas. Dickson is Dickson. Synergy Home Care. So Synergy Home Care is SYNERGYHOMECARE.com. Okay, so Douglas
Perfect.
Dickson at SynergyHomeCare.com.
Perfect. Okay, great. Thank you so much again. I appreciate your time. I know you're a busy man, and I really do feel like this was great information, and I hope that it helps someone.
Thank you so much, Ms. Osborn, and I'm more than happy to, reach talk to anybody who needs care. So thank you very much and have a blessed day.
You too.